Record high territory for the Dow and the S&P 500. All of this amid some stimulus hopes. And I do want to bring in our next guest to talk more about this. We're joined by Kathryn Rooney Vera, head of research and strategy at Baltic. Kathryn, always good to see you. So markets at record highs. We still do not have a stimulus deal officially yet. How important is it that we get one before the end of the year?
I don't think it's as important that we get one before the end of the year, Kristen, as it is that we eventually get one. It's already completely baked into the markets, 100% priced in that we do inevitably get some form of stimulus program. And I listened to Congressman Clyburn's previous interview, and I'd just like to add that of the $400 billion that were returned from the Fed to the federal government, that's going to be deployed in a more meaningful, more aggressive manner to inject stimulus into the U.S. economy. A lot of that money, Kristen, that was at the Federal Reserve was going to be tagged or used to deployed to buy corporate bonds by the Federal Reserve. So that is no longer necessary, and that money is going to be redeployed on the fiscal side. So I commend that returning of the money from the Federal Reserve to the U.S. government, and I think that the Fed has already done enough. At this point, Kristen, what we're looking for and what the market is completely baking in is fiscal stimulus, and I think it should be targeted rather than just kind of given away to everyone and used. Yes.
It's a time of the year where people look to their portfolios. Oftentimes, they might reallocate their portfolio as we head into a new year. Of course, it's a pandemic as well, and trading has been more active this year, especially among millennials, than in years past. But when you look ahead, it does seem as if consensus is coalescing around the expectation of a strong market next year on this vaccine optimism and the expectation of further stimulus. Do you agree with that?
I think it's a full bull scenario right now, Kristen. The market is completely pricing in an economic recovery, fiscal stimulus, and eradication of the vaccine. While fiscal and monetary stimulus are going to continue to be the main drivers of the market, I think there's a lot of room for disappointment. So that's why I'm telling our investors to stay long and ride this liquidity-driven, not fundamentally driven market upside, but hedge yourself, buy gold, buy tips, buy puts, buy defensive such as staples and utilities. Stay long, but protect yourself because there is a lot of downside and a lot of room to disappoint.
Okay, how significant could that downside be, Kathryn? And I ask because we do see that some economists estimate that actually in the first quarter with these cold winter months and high COVID infections, that we could actually see negative growth again.
Yeah, I wouldn't doubt it, Kristen. And remember, it's quarter-on-quarter seasonally adjusted, so we should expect a slowdown over the winter months. My concern is more with regard to the shutdowns that are happening right now and could be elongated. I think the market has priced in effective vaccines equivalent to immediate eradication, and I think that's wrong. So in the interim, at the time we get production, distribution, and people actually take the vaccine, which is highly dubious in my view, people take the vaccine. In the interim, you're going to get a lot of dampened economic activity from ongoing shutdowns and even worse, lockdowns in some of these major cities.
Kathryn, great to have you. We got to leave it there. That's Kathryn Rooney Vera, head of research and strategy at Baltic.